Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Our guest today is John Feneck. He is the consultant and portfolio manager of Feneck Consulting. Thanks for joining us, sir.
Sure. Thanks for having me, Abby.
Yeah, absolute pleasure. John, everyone's talking about the yield curve lately, but the Fed seems to keep on hiking rates as we go into a recession, and it doesn't make sense to anyone. Can you explain to our audience what your take on it is?
Sure. When I was interviewed on Kitco last month, David Lynn asked me about, or pointed out that Janet Yellen and some very smart, people like her were saying there is not going to be a recession next year, and I just don't see how that's possible. Yet you have, absolute exuberance in the broad market today when the Fed simply says, well, we're just going to take every meeting as it comes now, right? So like that little change in verbiage got all the momentum guys back on the buy side, and it's hilarious to me because it's really not funny because it's
Yeah.
trapping a lot of investors into what I think is going to be a scenario much like 2000, where you kept buying the dips because the tech boom, from 95 to 99 was real. And then in 2000, it started to taper off, and it was pretty subtle at first.
Hmm.
But I caution people. Like I remember sitting in 2001 and hearing a great growth manager speak who was top five in the industry at the time, and he was pounding the table on Intel INTC at $70. And I sat there and I watched everything he said, and I researched it, and I tracked it, and I tracked it all the way down to 35, half off. And that's
Jeez.
where I bought Intel in 2001. And then it took me over a decade to get back to 35.
Seriously?
So
Yeah, that's
yeah,
crazy.
if you look at the chart, it never crossed that price. So basically, when people come to me and say, hey, Amazon here at 125 or whatever, it looks like a great buy. It looks like a trade, it could be a trade. But when you look at the all-time high of 188-ish, and then you look at where it was in the 0809 correction, which was $10, you're up a
Hmm.
lot on a stock like that already. So to me, I want a confirmation if I go long, for a long-term hold on something like that. I want confirmation that the Fed's going to have my back, which they do not currently. They still, to me today, we're quite moderate to hawkish, where they're saying, hey, September's on the table based on the data. The data is not friendly right now,
Right.
for being long the broad market, in my view.
Well, you could just change the definition of a recession, like what Yellen just came out and did. So basically, we're not in a recession, even if it's negative growth for two. It's yeah, forget about it.
Sure.
So
Yeah, it's you know how how talking heads are. They're going to stay true to their knitting until it changes. And there's nothing right now that's really changing, in my view. I think the Fed has to remain hawkish. They've been this way since January 5th. Nothing today was positive. If you're owner of a mortgage or owner of a car loan, like I don't understand how, we celebrate on a day like this when the Nasdaq's up over 4%. It's pretty hilarious.
yeah. So John, silver has it's taken a dive recently, and are you surprised precious metals hasn't taken off like with everything in the environment? Are you surprised we haven't taken off like we'd expect it to?
Sure. So, we haven't bought silver since April of 2020, but we put a nice position on back then. We bought the triple silver ETF actually. And I'm not as bullish on silver right now because it's in what I call kind of like this channel where, you're in this 18 to 19 channel.
Right.
I've been on many programs since 25 plus silver saying we're not going to get to 30 this year. And we're probably going to test, 18 to 19. And so we're testing that right now. If you look at silver last week, it bounced right off 18. It hit 1801, and today it closed at 1910.
Yeah.
So, very good action that you see the 18 level holding, but we're still not out of the woods. I would be much more comfortable between 20 and 22. And yet, I think you still need to deploy some capital into the space, whether that's through buying silver or buying silver juniors or silver mid tiers. Because if you look at the action today, AG, MAG, CDE, HL, all the mid tier stuff really got a nice move. And silver miners will lead the entire mining sector, regardless of what they're trying to mine for when you come out of a correction. So you always want to keep an eye on something like SILJ, which is the
Right.
junior, or the SIL or SLVP. Those are the bigger, cap ETFs. And I watch that stuff like a hawk every single day for some type of, a bump.
So we talk lots about silver, but what is your outlook for gold? Do you have any price predictions, let's say
Mhm.
now till the beginning of 2023?
I don't predict anything out more than like a month to 3 months, because this market is so volatile.
Yeah.
But I will say that, we've been like with silver, where we've been talking about support levels and not resistance levels. We're doing the same with gold. And so gold has a 1675 to 1680 floor in our view. In
Hmm.
the near term, it's held that level pretty nicely. 1622 is probably another level that has minor support, but obviously 1575 to 1580 is major support. If that breaches on a few closes, that would be extremely negative in our view, and we would be out of a lot of stuff. I don't think that's going to happen though. I really don't. I think the market, the world is so backwards right now that there
Right.
is serious money like Ray Dalio, a billionaire, and a bunch of other hedge fund guys that are saying, hey, gold has a place in a portfolio.
Yeah. Will it be geopolitical issue or will it be the Fed pivoting to take precious metals off?
It could be either, which is why I think you want to have a position right now. We're about 10% cash in our mining portfolio. So for us, we're usually frictional cash 1 to 5%, but we're a
Hmm.
little higher because August is typically a bad month for mining in metals. And so if that trend continues, we'll be picking off some nice buys in August with the anticipation of September to October, November timeframe, seeing something, come to roost, whether it's geopolitical or the Fed flipping.
Yeah.
I think the Fed flipping for us is not going to happen in August, September, like so many have talked about. I think it's going to be what we saw today reinforced that, right? They said we're not taking any rate hikes off the table.
Right.
Sure, they're going to take it meeting by meeting, but I don't see CPI going from 9.1% to 5 or 6. I mean, it's
Yeah.
it's going to remain persistently high. And in his comments, he talked about, hey, we need to get CPI down, and how do you do that? You raise rates. So there's one tool, to combat inflation. Another thing that will help, of course, is oil. We call the double top around 120 plus a barrel, and
Hmm.
that will help a little bit, but it's still a process. And to me, like, the Fed isn't going to back off after being this hawkish. If you look at the vote today, it was unanimous, right? There was no dissenters. So like it's a tough environment right now. We're going to have to get through it. I do believe that the Fed will flip like they usually do, and that will
Yeah.
probably happen November to March.
Other than silver and gold, what other metals are you keen to be looking at right now or investing in?
Yeah, so I wrote on Palladium for Sprott, and I have a lot of interest in that space.
Oh, nice.
Palladium is extremely interesting. It's just super boring to most people, but I mean, it's interesting on the supply demand side
Yeah.
because it's in every catalytic converter in every car in the world, right?
Yeah.
So, like, we've talked for years about platinum replacing palladium, and it only represents about 5 to 7% of catalytic converter, usage. So, palladium is still the primary metal. But what's interesting is that 42% of the world's palladium is produced in Russia. So Russia
Wow.
could at any time pull the rug, as you're seeing with natural gas, with playing with different countries. I don't know if that's going to happen, but if you look at PALL, which is the biggest tracker out there, ETF, it absolutely exploded up on the Russian news back in February, March. And so that's the kind of, that's the reason we own some of the mid caps and small cap names in Palladium. We own a Canadian Palladium. We own Stillwater. We own a little bit of NKORF.
Okay.
Yeah, but we like the juniors because they're totally thrown out the window. And so, like, eventually these companies will, so something like Stillwater Critical Minerals is attached to their project in Montana is attached to a major, right? It's literally attached. So if
Yeah.
the major one day just says, hey, we're running low on palladium, where we see this shortage coming, they could just buy them with an afterthought, and that's simple as PGEZF. I think
Mhm.
very highly of management there. And, at 16, 17 cents, you're like, how is this not going to work for me? Right. I
Right.
mean,
In the
there's
long
the
term.
company's not, going bankrupt. There's no indication that there's anything wrong. It's just in this kind of a market, I mean, everything gets whacked. Right. So then you have to kind
Yeah.
of sift through the rubble and say, okay, what can I buy here with more confidence?
Now, what do you look for? Let's talk about the miners. What do you look for when you're investing your money into a miner? What makes it a winner?
Yeah, first thing is management for me,
Right.
because I have to be able to trust who's running the show. And communication is a huge part of that, right? I don't care if it's negative communication, like bad news. I just want to know, and I don't need to know before anyone else. I need to know, like here's the news item. Explain this news item to me because I'm very busy. I don't want to read a 100-page report or a, whatever, right, or a presentation deck. Just give me the 5-minute skinny on
Right.
what this means to us as shareholders, and I will relay that information to my followers. So we have a service. We have two services. One is where we update people in real time, which I think is very useful on a day like this, right? Because we put an alert out minutes after the Fed announcement saying, silver's getting a bump, silver miners are getting a bump, and then things went berserk for 2 hours, right? So I don't know how we're going to see the follow through or not tomorrow, but like that kind of information is helpful because we have a newsletter, and that's going to be less timely, like every newsletter, right? But I realize people can't afford one service and they have to look at a newsletter sometimes, and that's totally fine. We try to work with people within their budget. But yeah, one of the other screens I look for is jurisdiction. Obviously the world is full of landmines right now when it comes to jurisdictional risk. You've seen the news in Chile, you've seen the news in Peru. The Congo is always a risk. I mean, there's so many places when it comes to mining that are a risk. But when you look at something like copper, 45% of the world's copper is produced in places like Chile and Peru. So what do you do? I mean, do you buy copper in Arizona? That's a good idea. That's where I live. It's like it's a great jurisdiction. There's infrastructure, there's water, there's everything you need. Like it's like there's no oppressive overhang. With that said, I think picking off some of these Chilean and Peruvian kind of names right here, like Aftermath Silver, makes a lot of sense because at 17 cents, this thing was at $1.37 a year and a half ago. So you're down 85% to 90% almost. It's crazy. So you buy things like that with the idea that someone like Castillo in Peru is going to leave next year, and maybe a regime change would be positive for that part of the world.
Now, John, how can junior miners keep their margins up in a rising cost environment, in your opinion?
Yeah, it's going to be very difficult, and that doesn't affect something like some of the names we talked about, right? Like PGEZF and AAGFF. These are not producers; these are explorers or developers. So the producers are going to get hit. You saw that in Newmont's reports this week, right? They basically said their AISC went up to 1150. Obviously, the gold price has gone from say 1900 to 1725 or something since their last earnings report, right? So like the margins have compressed. But when you look at that, let's call it 1150 to 1750. It's a $600 an ounce margin. It's still very attractive. This is still a very real business. And so when you look at 2011, Newmont was trading only at like $100 to $200 margins, right? But the stock was going berserk because gold was going berserk. And now the margins look better. The yield looks better. It's a 4% dividend. The net debt to EBITDA looks way better. Like they carried a ton of debt back then. They have like they've managed debt. Like the big cap names have figured out how to get through a tough time. And I'm not saying they're perfect. I'm just saying that the biggest drag, of course, here is the price of energy. If you're producing with all these rigs, you're spending more money on diesel, and that's going to cut into profits. That was evident in their report. Costs are going up. But when they looked at their production guidance, I mean, it didn't drop like a rock, and the stock got crushed by 13%. So those are the kind of days that you basically hold your nose and buy if you like, the bigger cap stuff, and put it away.
Well, John, we really appreciate you coming to the channel and talking to us. What's your newsletter where people can reach you at?
Sure. Yeah. So it's the Feneck Commodities Report, and it's not on our website now. We're redoing our website this month, but FeneckConsulting.com will give you some idea of what we do. My email should be in the show notes, but it's john.feneck@yahoo.com, and I'm very responsive. So I try to help everyone, as I mentioned earlier, in terms of, helping them along this path, because whether it's me or someone else, they have to work with a professional. In my view, right now, it's very difficult.
Yeah. Well, we thank you. We'll put it in the description, by the way. We thank you so much, John. And hopefully in the next 2-3 months, we can have you back, and hopefully the Fed pivots and silver's at $30 an ounce.
That would be wonderful.
Awesome. Take care, John.